mean, I think as me and you have talked and we've talked on the show, this is just the beginning. I mean, I think this is ultimately going to be another 2-3 year bull market for tech because it's a fourth industrial revolution that's playing out in front of us. And that's going to be big tech and the multiplier. And I think Street's underestimating AI capex potential by 30 to 40%. And I think the biggest thing here is the multiplier. For every dollar spent on an NVIDIA chip, there's an 8 to 10 multiplier across the rest of tech. And this is just the beginning.
As you and I have discussed, and as we have discussed on the podcast, I believe that this is only the beginning because the fourth industrial revolution is unfolding in front of us. I believe that the IT industry will see another 2 to 3 year bull market, and the multiplier and big tech will be involved. Additionally, I believe that the street undervalues the potential of AI capex by 30 to 40%. And the multiplier is, in my opinion, the most significant factor here. The remainder of the computer industry is 8 to 10 times more expensive for every dollar invested on an NVIDIA processor. And this is only the start. Now that the rest of tech is seeing the advantages of the AI revolution, it's time to break out the popcorn. However, the AI revolution is now reaching consumers as well as businesses thanks to Cupertino. There will be a lot of deal making. We believe that over 50% of tech will be deal making, and it will be advantageous, in my opinion, if the strong become stronger. And I believe that Musk and Tesla stand to gain the most. We believe that given the autonomous vision and deregulation in the Beltway, we may be looking at a $2 trillion 0 cents market valuation for Tesla by the end of 2025. And now we have Tesla, the autonomous future. Autonomous alone, in my opinion, is worth $1 trillion. The bears don't see AI in their spreadsheets, which is another reason I believe they have overlooked this. This is a name that will keep rising in value. Autonomous robots and disruptive technology, in my opinion, might lead to a market valuation of at least $2 trillion, 0 cents by 2025. In my opinion, there will be a carve out for NVIDIA and a few other processors, as well as one for Apple and Tesla. And based on what we observe with the Gigafactory, we believe that Tesla eventually succeeds because of their presence in China. We're going to witness a significant increase of 15 to 20% in the upcoming year. Therefore, deliveries will keep rising. I believe that China is beginning to recover in terms of delivery. This quarter, we are beginning to observe it. Furthermore, many of their price reductions have already occurred and are already in the past. However, this is now much more of a champagne moment for Musk and Tesla shareholders. I'm not saying that there can't be some things that still happen. Okay, we're going to have some bumps on the road. And for that reason, many bears are, putting their spreadsheets into hibernation mode. Consolidation is seen from an EV standpoint. As for the international consolidation from Europe, I believe the shift is to Asia. You're going to see a lot of the big three go more hybrid and perhaps tone down that strategy. After all, Tesla is at the summit of that mountain. When it comes to the EV market, everyone else is paying rent while Tesla continues to rule the planet. There is more to Tesla's remarkable success than merely watching from the sidelines. With the most recent information on Tesla, stock price targets, innovation, and all things Elon Musk, Seeking Alpha is the one-stop shop for Tesla bulls and those with an eye for finding the next big thing in the stock market. Our channel may get a commission if a customer makes a purchase after clicking on the affiliate links in the description. Once more, in terms of scale and breadth, this is good for Tesla, but bad for the EV sector. However, if you look at it, Tesla will only gain an edge as they sort of sweep the leg on the EV tax credits. To be clear, though, it is the appetizer. It is autonomous, which is the primary event, our major emphasis, and the ultimate goal, the future of AI. And I believe the light bulbs went out there. The point is that in spite of all the Super Bowls, the bears are unable to recognize AI in the spreadsheets. They thus don't comprehend this motion when they're sitting there in hibernation state. According to the Tesla narrative, autonomous is valued at $1 trillion. And I think that everything is now coming to pass. Actually, it's only the beginning. This is still, in my opinion, the greatest pure AI play available. I predict that by the first half of next year, you will own a car that costs less than $30,000, 0 cents. And all of that, in my opinion, fits into their total growth projection of 20 to 30% by 2025. Now, consider their cost of products and their capacity to manufacture automobiles. In the end, it has decreased by 30 to 40%, and it may drop by another 20 to 30% the next year. Without a question, EVs and weaker demand have had a difficult year. I believe that the resurgence of growth that we have witnessed on margins is continuing until 2025. Then there are autonomous, AI, and I believe many additional development drivers. It's essential to what I believe to be a market valuation of at least $1 trillion. They, the bears who have been pessimistic since the market's $100 billion 0 cents valuation, will emerge from hibernation. In actuality, however, they will create more than 2 million cars in the upcoming year. Additionally, there is better penetration on FSD when considering the total growth narrative. It would be that yesterday night, I provided a lot of information on autonomous, FSD, and cybercab. Perhaps some people were disappointed with robotaxi today, but I wasn't. Look, it's just execution now. However, I think this story's pokes are the most underappreciated AI play available. I believe that within the next 2 to 3 years, you and I could find ourselves in a cybercab. Therefore, we're not discussing something that will happen in 5 or 10 years. This is something that will come to pass in the upcoming years. And while Lyft undoubtedly has its own problems, I don't necessarily see this as a bad thing for Uber. However, if you look at Tesla, this is going to be the next phase of development, driverless. But in the end, you need the margins in the delivery. They are fulfilling every requirement. In fact, I felt that was maybe the nicest conference call I've heard from Tesla and Musk in a long time. We are in a tech boom that will last well into 2025 and 2026. And I believe that a lot of the commotion we see here is more about having these labels than it is about having time to feel anxious. Because in my opinion, Tesla's stock has the potential to quadruple in value over the next 18 months. Clearly, there has been a parabolic move. However, autonomous itself is worth $1 trillion, as you and I discussed. Therefore, in my opinion, Tesla is the most underappreciated AI brand available now. It's not absurd. It could even be cautious to speculate that, depending on how the autonomous turns out, this stock might be worth $500, 0 cents, or $600, 0 cents. The margin narrative has obviously leveled off here. In my opinion, investors, I believe, look, the haters still hate. They will love it here just as much as they did at $50, 0 cents. However, I believe that when we sit here and look at the market in 2025, this will be kind of a golden star, about what we envision for Tesla. $2 trillion, 0 cents, in my opinion, is imminent. Look, I believe that Sweeney will eventually be riding in a driverless cybercab to play golf throughout the next 4 to 5 years. Within the next 4 to 5 years, that will take place. The entire narrative revolves around gross margins, after all. The stock of Tesla has been facing a significant headwind, ranging from $30, 0 cents to $40, 0 cents, in my opinion. Gross margins, this is a blowout. We didn't even believe that a gross margin beat of 200 to 300 basis points was possible. This indicates price reductions are now under control. The margins begin to increase again. At this point, you begin to approach 20% gross margins. This, I believe, is the beginning. In the end, the stock will have a 3 in front of it as the gross margins are beginning to rise, and it will continue to expand into the next year. From the standpoint of delivery, we believe that autonomous robots and basically the AI play are the longer term stories here. I see margins in the street, which is what they need to see here. It is impossible to have margins approaching 13, 14%. The fact that margins are now beginning to level out is crucial, not just from the standpoint of cash flow, but also because it means that the worst is behind us. And after weighing all the drawbacks and bears, the conclusion is that deliveries will begin to increase. I believe that one of the quarter sources of strength is China, but for any bear, that gross margin is a Goldilocks. Well, for any bull, it's a Goldilocks. It's kind of a nightmare because the bears were the main focus of the narrative. The key to a growth narrative is a car that costs less than $30,000, 0 cents. And by the middle of 2025, I think that will happen. As the grow.